Andrew Carnegie once said, 90% of all millionaires become so through owning real estate. And Franklin D. Roosevelt called real estate the safest investment in the world. They were both right, but the truth is, not every property builds wealth. The type of property you choose makes all the difference. At the McCarty team, we've developed a proven strategy that helps busy professionals, just like you, grow their money with fewer headaches and stronger results. And in this short video, we'd like to explain to you how. Let's get started. When evaluating a property for purchase, we look closely at the area renter profile, inventory supply and demand, the price-to-rent ratio, monthly cash flow, and potential profit when sold. We also factor in growth signals like new schools, new roads, new jobs, and new stores, along with hidden costs such as high property taxes and HOA fees or ongoing maintenance. To be conservative, we also calculate vacancy, annual property tax increases, and reserve costs up front. If the property still delivers positive cash flow under those conditions, then we should have a winning investment. Early on, small condos and townhomes looked like an affordable way to invest and seemed profitable on paper. But in practice, the renter profile was often less financially stable, leading to high turnover and payment issues. High HOA fees also cut deeply into margins, leaving very little monthly cash flow. This experience reinforced an important truth. Not every deal that looks attractive on paper creates real success. Many people believe Airbnbs are the fastest path to strong returns. We've tested them too. And while they can generate higher gross rent, the reality is that they demand constant work. Turnover happens every few days. Properties must be cleaned after every guest. Payments and refunds need constant processing. Repairs pop up regularly. And advertising never stops. Robert Kiyosaki once said, "Real estate investing, even on a very small scale, remains a tried and true means of building cash flow and wealth." But Airbnbs often function more like a hospitality business than a true investment. Unless you want to be a hotel manager, they create more headaches than returns. That's why we focus on strategies that provide consistent income without becoming a second full-time job. This is why we target larger single-family homes with an average purchase price of around $375,000 in up-and-coming markets. With relatively affordable prices under $400,000 and average rental rates of about $2,800 per month. These properties tend to be low maintenance, generate positive monthly cash flow for our clients, and quickly build equity, creating significant profits that can be reinvested to multiply properties with ease. These homes also attract financially stable tenants, families who stay longer and take better care of the property. They provide steady rental income and, in the right markets, appreciation as communities grow with new schools, retail centers, and jobs. Compared to condos, you avoid high HOA fees. Compared to Airbnbs, you avoid constant turnover. As Barbara Corcoran has proven by building her empire from a $1,000 loan into a $70 million real estate company, massive wealth can be created if you select the right properties in the right markets. Larger single-family homes create the ideal balance of solid returns with minimal stress. Another key part of our strategy is new construction. Resale properties often require immediate repairs and ongoing maintenance as appliances and systems age. Those expenses quickly eat into returns. New construction, on the other hand, comes with builder warranties that keep costs low. By the time the property begins to age, usually around 5 years, we sell and reinvest. Our rent and hold window is typically 3 to 5 years, depending on market conditions. We also like to purchase in the first phase of new communities when prices are lowest. Builders raise prices as each phase sells, creating built-in appreciation. For example, one client contracted for a home before construction began. By the time it was finished, just over 5 months later, the builder had raised prices, and that client had already gained $40,000 in equity before day one of ownership. That's the power of buying smart in new construction. As Grant Cardone has said, real estate is the best way to create wealth. It provides cash flow, appreciation, and tax benefits. That's exactly why new construction homes play such a key role in our strategy. After testing many approaches, condos, townhomes, Airbnbs, resales, short sales, foreclosures, auctions, and more, we found that newer, larger single-family homes in growth markets deliver the strongest mix of cash flow, tenant stability, and long-term wealth. As Warren Buffett once said, "If I had a way of buying a couple 100,000 single-family homes, I would load up on them." We couldn't agree more. That's the strategy we bring to our clients. We help you find these properties, acquire them with confidence, manage them effectively, and ultimately sell and reinvest to multiply your returns. If you're looking for a way to build wealth through real estate without it consuming your time and energy, the McCarty team is here to make it happen with ease. All you provide is the capital, and we deliver the results: predictable cash flow, tax efficiency, and legacy wealth that lasts. Schedule your strategy call now to get started